Welcome to Esop 101, your freshman video covering the California Hydronics Employee Stock Ownership Plan. The Employee Stock Ownership Plan is one of your two retirement plans offered by California Hydronics Company. The ESOP works differently than the 401k, and we will share some of these differences today and how by pulling together, your efforts can impact CHC's share value and your future retirement. But why are ESOPs good for me, the employee? None of my friends or family have ever heard of one. There are only 7,000 ESOPs nationwide compared to more than 580,000 401k plans, so it's not surprising that you have not heard of one. Here are some things to remember. Based on Department of Labor filings, companies on average contribute 50 to 100% more to ESOPs than non-ESOP companies contribute to 401k plans. Most of the money in a 401k plan comes from the employee. With few exceptions, all the assets in an ESOP come from the company. Research by the Department of Labor shows that ESOPs not only have higher rates of return than 401k plans, they also tend to be less volatile. And ESOPs cover more employees, especially younger and lower income employees, than 401k plans. So why does California Hydronics Company offer an ESOP? The primary reason is for you to share in company growth and ownership. Here are some other reasons. The ESOP is a qualified plan, similar to your 401k, with these differences. You share in the company's growth. It is funded with employer money only. Retirement assets are for your future. Company profits fund the ESOP. Your account grows annually with a contribution to your account once per year, as long as you have worked 1,000 hours in the calendar year. Your account value can go up or down based upon the share price, which is valued once per year by an outside independent valuation firm. Like the 401k plan, you're not taxed until you take your money out of the plan. But you can only take your money out of the plan when you leave CHC, you retire, are disabled, or pass away. Your contributions impact the share price by helping keep expenses down, keeping our customers happy, managing inventory, and adding new customers. This all sounds great. How do I get in? Full and part-time employees are automatically enrolled in the ESOP after you have completed 1,000 hours of service. You don't have to do anything. In the ESOP, you also have an entry date, which is either your 1-year anniversary date or the January 1st after you have worked 1,000 hours. How do I actually receive shares of CHC stock? Allocation is the process of determining how many shares each participant receives. It happens once a year after the plan year ends and after CHC has received the value of stock from the independent valuation firm. If you have worked at least 1,000 hours and have entered the plan, you will receive your allocation of shares. Your allocation is a formula based upon your compensation compared to the total compensation of CHC. How do I know I received shares? Once a year, you will receive a statement that shows how many shares you have at the beginning of the year, how many were allocated for the year, and your new ending balance. This statement will also be available on ESOP Connections, our ESOP website, and after the allocation is approved, it will appear on your 401k plan statement and your 401k website. One of the other important components of your ESOP is vesting. Vesting is how you earn your allocated shares. Just because you have been allocated shares does not mean you get to keep them. This is what your vesting percentage tells you. You begin vesting your second year of employment, and at this point, 20% of your shares are vested. You earn 20% per year until you have worked with CHC for 6 full years. At this point, your account is 100% vested. This means that if you left CHC after 6 years, the entire account balance is yours. If you left before 6 full years of participation, you will only take part of your balance. Here's what one of the CHC retirees had to say about the ESOP. It not only helps the company, but it shows how much leadership cares for the employees. The ESOP gives you a sense of ownership. You're not just working for a paycheck, but for your future. You are part of a team, and a very good one too. As CHC prospers, so do you. The ESOP, along with the 401k plan, provides an unbeatable opportunity to further your career and your retirement. In conclusion, you are employee owners and your individual and company contributions matter. Help us focus on the things that impact share price. Sales growth is important to show that CHC business is expanding. Expense control is critical to meeting the bottom line budget and maximizing cash flow. Inventory control and receivable collection impact cash flow and therefore share value. We know that with all of us pulling in the same direction, we will continue to be successful. If you have any questions about the ESOP or would like to talk to one of our advisors, we encourage you to reach out at the emails below. Thank you very much and have a great day.